Welcome to our post-budget 2025 webinar 2.0. So second time lucky. It's brought to you by TreasuryONE and ETM Analytics. I'm joined by Director George Glynos, also TreasuryONE's currency strategist André Cilliers, and in the background we also have Vichard Cilliers. He is the head of market risk at TreasuryONE. Thank you very much for everyone joining us. Just note that if you have any comments or questions, please pop them along in the comment section. We're really going to open up for a massive Q&A discussion afterwards. So please be ready with any and all of your questions today are relevant. George, but before you get to your presentation, I just want to actually take a step back. And if we look back at our pre-election analysis from a year ago, we put forward that the best realistic case scenario outcome for the election was some form of coalition government. So we hoped for a GNU. South Africa voted for a GNU and we got a GNU in all its messiness. So I don't know if we were perhaps naive in thinking that these type of frictions that we're seeing with the budget was never going to happen. But here we are. And, the silver lining is that we have a budget, which is more than we can say a month ago. And we're going to discuss that budget today, but in all likelihood, the budget that's going to be adopted may look a little bit different to what it is today. And looking to the budget, I asked you last night what you would give the score for the budget, and you slept on it. Did that change?
No. So for everybody's benefit, that was my score. Nothing's really changed, but just in answer or a comment on your on your comments on the GNU, I guess it's a matter of perspective really, because from where I sit, no budget is in many ways a lot better than a bad budget, and I think what we're witnessing at the moment is democracy in action. I wouldn't get too worked up about the fact that this budget doesn't necessarily have all the requisite support to be passed in Parliament. It's going to need to be panel beated for sure. And we hope that it gets panel beated properly. But it's an improvement on the leaked budget that we had 3 weeks ago. So therein, I think lies at least some reason to be constructive about the process, if not the budget itself, then at least the process that sits behind this budget, because had we pushed ahead with a 2% VAT increase in the last budget, I think that would have been a lot more hurtful than what we've got in this time around. So the goalposts have shifted. I'm not sure that they've shifted enough. The DA has already indicated that it hasn't shifted enough for them. MK said similar, EFF said similar. So your biggest parties are not in favor of this budget. If the ANC does something, they're going to have to do it with smaller parties, and there's no guarantee that they'll get that right. So, I think that's just the sort of the backdrop to this whole thing. And I wonder if I shouldn't just kick off with the rest of these slides, just to put everybody in the picture as to why I would give it a 3 out of 10, because if I just look at the list, and I'm not going to dwell on this too long, you guys are welcome to look at this in your own time. But to give a balanced perspective that I did consider both sides of the story, I did make a list of the pros and cons that I picked up out of this budget. I would have to say that the substance of the cons tended to outweigh the pros, which is why this budget ultimately got a fail. But I think even more significant than going through point by point is to maybe paint a couple of pictures for you, because I think this is going to drill home the point as to why I've been pessimistic or rather negative on these budgets for quite a long time now, and why I remain that way. And I've always indicated that at the point where I see the kind of change that I want to see, I will change my scoring. I will turn it to a pass, and I will be a lot more constructive and positive about future prospects. But this picture sums things up pretty beautifully. The gray stepped line is effectively your credit ratings, South Africa's credit ratings, but inverted. I just simply did that so that it fits nicely on top of the budget numbers that we've pulled out more recently and what we've seen historically. And you can see there's quite a tight fit. So what you're essentially looking at here is the higher that blue line goes, the more stressed the environment becomes. That dotted grey line in between that is literally the separation of unsustainable from sustainable. Below that dotted line is sustainable. You will see in the days of Trevor Manuel, when we had balanced budgets and we even produced a budget surplus at one point, we were infinitely sustainable. And so, that coincided with South Africa's highest credit rating, which at the time was in the A's. Okay, we had an A- credit rating, which is something I think a lot of us tend to forget. But through the course of time, things changed, and things changed for the worse. And maybe reflected a little differently is this particular picture, and you can see that during that Mbeki era, the difference between expenditure and revenue was pretty much on top of each other. And right towards the end of the Mbeki era, you can see how revenue, which was the blue line, exceeded expenditure, which was the purple. Now, you can do that ad infinitum. You can continue to run a government beautifully under those circumstances. We had debt to GDP ratios at that time of about 25%. Currently, we are closer to 75%. So there's been a big shift there. And you can see what happened. We had the global financial crisis. The Zuma administration responded to that pretty quickly. No one could really fault them for doing that. But it was in the aftermath of that we just never really got back to grips with our budget. And you can see the difference pre and post. Mbeki across into Zuma, those two eras marked a very big shift in the way that policy was conducted within the ANC. And so immediately we shifted from something that was a lot more market friendly to something a lot less market friendly. Whilst it might have been acceptable in the early stages of Zuma, it certainly wasn't towards the end. And the ramifications of that is that it's dragged all the way through to the Ramaphosa era as well. So here we've got a situation where you've just got expenditure exceeding revenue consistently over a period of exceeding a decade now. The real issue that I have with the way these budgets have morphed over that time is that increasingly we have spent more and more on social protection, security. It's social expenditures that you simply cannot roll back. Try rolling back government grants, for example. Try rolling back education. Try rolling back things like healthcare expenditure and the like, and you will see a massive revolt very, very quickly. So we have built up this expectation of what this government is supposed to do and where it wants to spend its money. But the result is that we have now left ourselves with very little in the way of expenditure that we can adequately reform without there being a significant pushback. And you're talking about a figure of just around 21%. So we've got 21% worth of wiggle room that we can really take a Doge type approach and start axing costs. You could probably find efficiencies through the rest of the spending as well, but it's a lot more sensitive. You certainly wouldn't be able to do it with things like government grants if you wanted to keep social cohesion throughout the economy. So the net result is that you've had debt service costs that have just continuously risen. We had the end of fiscal discipline after Trevor Manuel, and from there it's just been a one-way street up, exacerbated in 2020, obviously, by the onset of the pandemic and what that did to the country's fiscal numbers. And, we showed signs of recovering from that, but boy, boom, we just reasserted that trend, and it's continued to go. Now we are told that this trend that you see in this picture is now going to stabilize, go sideways, and maybe even come down a little bit. This is what we are told. But we've been told this picture before many times, and repeatedly the numbers have failed to live up to the expectations of National Treasury. So you've got to take these forecasts with a high degree of skepticism, for the simple reason that the forecasts of National Treasury previously have not played out in the way that they should have played out. And the real tragedy is that whilst we're spending on all of these social issues and social safety nets, which I understand is necessary in a country like South Africa, What we do take away from is expenditure on fixed investments, capital projects, things like that is captured in what we call gross fixed capital formation, which is this chart. And so essentially what you're seeing here is a picture of a lack of investment. Now, that wasn't the case during 05, 06, 07. Whilst we still had Trevor Manuel and Thabo Mbeki, they targeted that 25%, a 25% of GDP level that you can see in the dotted line. The National Development Plan had targeted levels even higher than that at 30%. So they wanted 30% of South Africa's GDP, the equivalent of 30% of South Africa's GDP being invested into infrastructure. That would be roads, dams, ports, railways, you name it, hospitals, etc. All of that would have been wonderful had it turned out to be the case. We were on that track, but that quickly reversed under Zuma and then just continued to erode to the point where we are at right now. If you wanted to ask me, give me the one number that I would focus on to tell me that South Africa has meaningfully turned the corner, implementing reforms and going in the right way, it would be this figure. And yet, as you can see, the latest number has in fact deteriorated. And when you look at the breakdown of that, you'll find that it's actually private business that does most of the investing. If you have a look at general government and public corporations, they're well down on where they used to be. SOEs in particular, which is part of the black line, are the biggest culprits of this weaker investment culture. So it's not the private sector that's the issue over here. It's state-owned enterprises. Not that we didn't know that, but when you see it in a picture like this, it kind of hits home a little. It hits home a little harder. So unfortunately, we haven't been able to take advantage of what has essentially been a boom cycle in commodities. We've been unable to respond to the market environment that should have been extremely positive for South Africa. And part of that is because we haven't invested in things like our logistics systems, our trains, our ports, etc. So you cannot take advantage of that. Layer over that a whole bunch of regulation that detracts from the dynamism of the mining industry and makes it that much more difficult to get projects off the ground. And you get left with this particular picture where investment as a percent of GDP has been dropping. That's the same chart as before, just reflected versus the commodity price index, which is, I guess, a little disappointing. This is what we need to be able to turn around. We need to be able to take advantage of commodity price booms like this. And we would have been able to had it not been for the fact that we've got infrastructure that's woefully deficient. So instead of relying more on the private sector to do some of the heavy lifting, acknowledging the fact that the government and the state-owned enterprises have done a poor job, and rather handing things over to the private sector, which by the numbers you can see have done a better job in investing and reinvesting for the future, we have chosen instead to hold on to everything that we've held on to over the past decade, and to rather look at things like increasing VAT revenue as a percent of total revenue. That's what we've defaulted to. And unfortunately, this is where this budget falls short for me. This is exactly not what we should be doing. What we should be doing is, and it wouldn't cost the government anything, what we should be doing is handing over some of the economic control to the private sector and private companies that have a profit motive, that have a vested interest in getting things working well and working sustainably, and yet we didn't do that. So what we have is a subdued GDP environment. The GDP growth rate is sitting below 1%. If you look at National Treasury's forecast, they tell us that things are going to bounce back up again. Well, that's always the case, right? I mean, just have a look at history and you'll see previous National Treasury forecasts. And so you'll understand why I tell you that you've got to accept all of these things with a heavy dose of skepticism, purely because they haven't proved particularly accurate historically. And again, we're led to believe that this time it's going to be different. This time, because the GNU's in play, et cetera, that we are likely to get better GDP growth. Well, we ended load shedding pretty much early in 2024. And the growth numbers haven't somehow recovered in the way that many people had anticipated. And it's because there are deep-rooted structural problems in this country that will not be resolved unless we start to turn our focus towards investing in things like infrastructure. And so whilst this budget has earmarked about R1 trillion to be spent on infrastructure over the next 3 years, it still falls short of what was required. We could have boosted that number, not just through government spending, but through inclusion of the private sector to take up the reins. There's nothing wrong with privatisation when you have a government that is running exceptionally inefficiently. Okay, I'm not saying privatisation is the silver bullet to cure all ills, but when you have a situation where the government is performing so much more poorly than your private sector, it makes a lot of sense to rely more heavily on that portion of the economy that can perhaps do a better job. And unfortunately, we're sitting with this budget taking place against the backdrop of a global economic environment that is slowing. So if I have a look at our dollar liquidity cycle as a measure of the global business cycle, it's on the way down. That red line doesn't lie, it's on the way down. And if you have a look at the labels at the bottom, it tends to coincide with all the crises. And perhaps we're going to be approaching one pretty rapidly with all the changes that the Trump administration are bringing in. He is going to dislocate a lot of trade relations. He is going to disrupt much of what's going on both in America and in trade. And so there is going to be some of this change that's going to push through, and it's going to be uncomfortable, and it probably will detract from GDP growth. But now we've got another problem. As it is, we are struggling to get our budget figures to align with what our objectives are. And part of the reason is because our growth is so weak. Add to that this global backdrop that's deteriorating, and you begin to realize that South Africa has a long way to go before this budget looks like it's going to be sustainable. Not to mention the fact that in its current form, it's probably not going to pass easily. Ilse Marie put this together for us just to give us a feel for where the ANC could find support for this budget. And it looks something along these lines. So you've got the likes of the IFP and maybe Patriotic Alliance that could align with the ANC, a little bit of the Good Party as well. But in many respects, it's going to be a very, very close call. If they do get it passed, it's going to be a squeak past the 50% mark. Alternatively, if many of these parties feel that this is too much of a hot potato to support this budget, it's not getting good press, the optics are poor, we don't think that we're going to support this thing, well, the ANC is going to have to go back to the drawing board and look at other forms of compromise to try and get this thing over the line. So just to finish off this presentation, what was the ultimate impact on markets? Well, we didn't see a big impact on Rand sentiment. It has remained elevated. It has come down a little bit. If you look at the higher frequency yellow line in the background, it did drop on this news, but nothing to get overly concerned about. The backdrop is still one of being Rand constructive, and that's a function of a whole bunch of things: higher interest rates, commodity prices that are still in South Africa's favor and boosting our terms of trade. The dollar that's coming under pressure is another one. So there is still reason to be optimistic that the Rand can remain resilient, but we could have been looking at an environment that was so much more positive had we just done a few changes to the budget. So in terms of our valuation ranges, pretty much banging on fair value insofar as the dollar is concerned, not far off that. Insofar as the euro is concerned, on the right-hand chart, against the pound, we're a little undervalued, as you can see, and against the likes of the Aussie dollar, less so. So the prospect for interest rates going forward at this point is as much as it was. Not a whole lot changed in this budget to meaningfully change the way that monetary policy is going to be conducted. So, we think that there's more scope for interest rates to come down later this year. But in a nutshell, there wasn't much reaction from the markets, primarily because we had the leaked budget of 3 weeks ago. And truthfully, if I compare it to previous budgets, not enough changed for me to gain the confidence that suddenly we're going to be able to extricate ourselves out of this low growth trap and get ourselves into a higher growth environment that allows us to meaningfully target stronger tax revenues such that we can get back to looking forward to credit ratings increases instead of the downgrades that we've had in recent years. Ilse Marie, that's pretty much my summary done. So I'm very happy to open up for debates and questions.
Yeah, there's some questions coming through. Andrea, I would also like to hear from your side just a very quick, compact snapshot of what your initial thoughts were of the budget.
Mute. Andre, mute. Andre, you are mute.
Azai?
Thank you, Ilse Marie. My immediate reaction sort of joins up here with what George has been saying is there is only one way that South Africa, I want to be calling it out in simple terms, can be saved from a disaster, and that's economic growth. And as long as we're spending the bulk of our money on repaying debt or interest or servicing interest on debt, and we pride ourselves on how many people we are paying social welfare pensions and allowances to, rather than how many people we're putting back into jobs, we're heading for a disaster. So we need to focus on growth, and this is not what I'm seeing in the budget at this point in time, and that needs to change.
Yes, definitely. And please keep on posting these questions. Philip Spencer asked the question. I'm just going to summarize very quickly, is that, he doesn't understand why South Africa is not taking a drastic policy change or Malay-style approach to addressing the issues in the country. ANC support should tell them to change. George, I asked you a similar question actually in our previous our discussions last night, is at what point, what is South Africa's rock bottom for us to hit before we start seeing the meaningful structural changes that we're calling for to see in these budgets? I mean, what level do we have to hit before we get to those drastic changes?
Well, I mean, seeing as we're talking about Javier Milei, we can also bring Argentina into the picture, because what happened with Argentina is that they literally hit the skids. They effectively got to the point of default. Now, I hope that our political change that happens in the background happens a little faster than it did in Argentina, such that we can usher in some of these changes a little sooner than they did. If we do, the level of reform that we would need to implement would not need to be as dramatic as what Javier Milei has deployed in Argentina. But I think the point is a very valid one. We should be, if we're going to call a budget bold, well, then we must be bold. Hiking a VAT rate does not make a budget bold. It makes a budget lazy, in my opinion, because it's a lot easier to just push up a VAT rate than it is to do the hard yards and go through government department by government department, rooting out all the malfeasance, the corruption, the maladministration, and the wasted spending that takes place. You'll probably find, I mean, if Elon Musk's examples in America are anything to go by, look at how much he's found in a really short space of time. And I saw an interview of his just the other day talking about exactly what he was doing. He wasn't even doing anything particularly spectacular. He was just looking for numbers that stood out as being difficult to explain. And he looked into them, and he focused purely on comments that had been made in Congress, and then went and investigated them and found an awful lot of wasted money. I doubt that that's just a US problem. I think it's probably a global problem, a worldwide problem. But we should be taking a leaf out of that book and seeing what we can do to become more efficient. And if we did that, we could save ourselves the agony of having to lift the tax burden on the private sector, which is really the only growth engine this country's got. So until such time as we change our mindset to focus on literally the private sector, and again, the counter argument to all of this is always tends to be, oh, but the private sector participated in some of the corruption together with government. Yes, that might be true. I'm not saying that the private sector is perfect, not by any stretch of the imagination. But you just have to look at the investment numbers, and you know that there's one group within the economy that is still investing and doing something constructive, and there's another group that is dropping the ball. We'll rather give it to the group that's being constructive than the group that's dropping the ball. And that's what I wanted to see in this budget. I wanted to see government take the private sector into its confidence and say, here we go. We are unleashing you into this economy. Go and do your thing. We are going to give you opportunities upon opportunities for you to take advantage of. South Africa is open for business. We are going to turn into a construction site. This is what the positive outlook is going to be, and off to the races. That's what I want to see. And the beauty about something like that is that it doesn't require government to spend. All it requires is government to change its perspective and get out of the way. And that's all I've wanted for the past decade. And call me the eternal optimist that one day I'm going to get to see this unfold, because I'm hoping sanity eventually prevails. But it's not in this budget, and that's my frustration. We talk about public-private partnerships. Why do we have to have public-private? Why can't we just liberalize some of these network industries and allow the private sector to do what it does best?
I would just like to add to your point, George, sorry, Vichard, is that, and there are some conflicting reports, but everyone is kind of on the same page. And there are reports that actually puts the government's fiscal multiplier at below zero, in minus negative territory, or at zero, which means for every rand that they spend, they actually detract from economic growth. I mean, the facts are there. The data is there to prove that. So, just based on that, there should be more space for the private sector to really step in, to drive the infrastructure drive, turn us into a construction site, like you said. They could really drive the growth that we need to start resolving the poverty issues, the employment concerns that we have. I mean, our youth unemployment rate is astronomical. And none of these policies that have been put forward in yesterday's budget is going to address that. And that remains a major concern. Vichard, you wanted to jump in there as well.
Yeah, I just want to ask the question here for Andre and for George. Is a lot has been spoken about, and you just said about the Elon style of finding the numbers. But there's been corruption has been showcased previously. We've had the Zondo Commission. We know where the wasteful expenditure is. It's highlighted each year. So it's not like we don't have the numbers. The public sector is still getting their 5.5% wage increases. That still makes up 37% of our spending. And we know it's bloated, but how do we address that issues?
Okay, Richard, George had used the words, as long as they don't change their mindset. Now let's look at 5.5% increases for state employees. Above inflation, well above inflation. The Minister of Finance yesterday says he's allocating 11 billion rands to look at putting people over the age of 55 on retirement. And then comes the interesting one, because then they can replace them with younger people. Now, you're not cutting down anything here. You're just lowering your salary, your average salary that you pay. You're not cutting down. You're not making the people less. You're just making the average salary lower. Give them above inflation increases for a couple of years, and you're back to square one, because you haven't really made any cut in the size of your state departments. That's the wrong mindset. The mindset that should be adopted is make it smaller, not keep it the same and lower the average salary. That doesn't help us. So, George, you can continue with what Vichard had asked there. I just wanted to bring this in. I have a question as well, and I'd like you to address that as well. They're speaking about a tax hole that they could recover, 800 billion. There's currently a 60 billion hole. They've given some money to SOEs to go and recover this 800 billion. I made a quick calculation. My oh my, that's not a bad yield on our investment of 4 billion into SOEs if we can get 800 billion. If we can get 800 billion and our hole was only 6 billion, 60 billion, and I increase my spending by roughly 8.5%, and I could recover my 800 billion, that 800 billion will last us for several years before we've exhausted that. That's apart from any growth that we get in other income. So how effective do you think that will be, that 4 billion spending on SOEs?
Andre, I have a love-hate relationship with SARS, as we all do. For personal reasons, I wish they were a lot less efficient. But I mean, from a fiscal point of view, you obviously want them to collect what's due. Where they got that figure, where Kisveta gets this figure of 800 billion from, I don't know, but that's an enormous amount of money. I don't know if that's related to illegal goods transfers over South Africa's borders, because I can't see it coming from registered taxpayers and companies. So it's more about illicit trade that I think gets us a much higher number, and I'm all for that. So if that's going to assist, then by all means do it. But as long as it doesn't mean that they start becoming belligerent in the way that they start attacking the existing tax base, because the existing tax base is on its knees. And you can actually see it in the numbers. If I have a look at some of the figures that we look at, whenever government tries to push too hard in increasing the tax burden, you get a negative feedback. That negative feedback is counterproductive, because what you're left with afterwards is not the same incremental increase in tax revenues as you've effectively imposed, that burden that you've imposed on the country and on the private sector. So you've got to be really, really careful. And I think South Africa's already pushing the limits of the Laffer curve, so to speak, of how much you can push, the tax burden and still get a constructive return on doing so. So like my feelings on SARS is, by all means, become efficient, but let's I suspect that efficiency is going to come out of tackling illicit behavior rather than just going after registered taxpayers. I've lost my train of thought with Vichard's question. Vichard, if you could just refresh
my question is, you spoke earlier about there's only 21% wiggle room on your first slides.
Yes.
But some of our big spend is in employment costs, 37% that you mentioned and then there's wasteful expenditure and tender fraud and the Zondo Commission. And we know you spoke about Elon Musk and Doge, and then Andre said it's about the change of mindset you spoke earlier. But what else can we do? How do we? What ruckus will be caused if we cut the public sector down by 50%? Because I think we're 50% bloated there.
So here's the thing. We don't always, I would love this government to become more efficient. Let me just state that at the outset. We all do. It's an obvious thing. I think even people in government will admit to that. So there's nothing special about that statement. But we don't. We need to get out of this idea that the only way to balance a budget is by slashing expenditure. That's one part of it. The other part of it is, how do you raise revenues? But how do you raise revenues without necessarily raising the tax burden? And that's the interesting bit. So that's the part of the equation that I'm most interested in, and that's where I think South Africa's opportunity sits. And again, the point that I keep coming back to is that South Africa should be focusing more on things like privatisation. These SOEs are doing a lousy job of running themselves. Okay, they have destroyed South Africa's infrastructure. They haven't maintained. They've become a burden on the state that's had to bail them out repeatedly. I don't care what the government says in terms of not going to bail them out in the future. I mean, I've heard that 100 times, and it doesn't play out. When push comes to shove, you can't let these companies fail because the impact of it is too catastrophic on the economy. So you've got this constant burden that sits there. I'm saying the way out of this mess is to privatize, is to grow the size of the private sector, increase the level of competition within those network industries. So instead of having one Transnet, have a few private sector companies that can compete against each other, utilizing the network that South Africa owns, which we can continue to own, but allow them to run the trains, own the trains, invest in the trains, make it a proper business, not something that lasts 5 years, but something that lasts 20 years. Get private sector capital to be invested in this country in a way that you don't have to constantly rely on the government balance sheet in order to raise the amount of money that's required to get all of this done. That's my contention, is that the way out of this isn't necessarily always about cutting. We can cut costs, and we should cut costs, and there's absolutely no way that anyone can convince me that this government is fit for purpose. It's absolutely not. It's far too big, it's far too bloated, and it's far too wasteful. But, that aside, so you'll save a couple of, you'll save, I don't know, maybe 50 billion a year by creating efficiencies. The real gains are going to come out of growing this economy. And the way you grow this economy is by relying more heavily on the private sector, because the government is doing a poor job of running themselves. It's really that simple.
But the thing is, George, and I agree with you 100%, these SOEs must go. Rather sell some of them off now. And if you then so badly want to be part of it, keep a stake, keep 25% for yourself as the government, but sell the other 75%. Give the control over to the private sector. People think that will cost people their jobs, but I think that they're completely looking at this wrongly. It will create jobs because they will become more efficient, they will add value to the economy, and it will add growth to the economy, and that will put people in jobs. The focus should not be on how much milk can you get from the 3 cows that you have. The focus should be on getting 4 or 5 cows so that you can increase your production of milk so that you have a bigger cake that you can bake with the milk that you get. And that's where we go wrong. Our mindset is not changed on that. We're just trying to milk what we have. We're not growing. And you again said that now. And what I said when I spoke for the first time, there's only one way out of this. The economy must grow. The problem we also face, and we sound very negative today, but the problem is that I have to listen to a budget speech year after year. The one year I get told that debt will, as a percentage of GDP, will peak at 68%, that moves to 70%, that moves to 71%, and now we're at 76 point something. I'm being told that we'll have growth of 1.5, and then it turns out to be 1.2, 0.8. The figures that keeps on being given to us is never achieved. So whatever you're giving me in this budget of a 1.8% is always doubted by everybody, and it does not instill any confidence. Now, if your budget speech and your government does not instill confidence, it creates a bad investor environment throughout the world, throughout South Africa. And it influences the mindset of people. And that's what we need to change. Just a mindset change, and start giving us figures that we can believe, and start giving us results that matches up with your promises. And when you said, it doesn't help to just look at expenditure, you must look at income as well. But on the milk that you get from your 3 cows, see how you use that milk and how much of that gets spilled on the way to the kitchen to start baking the cake. Because a lot of spillage happens on our cans of milk that we're getting. And that's the corruption. That's the inflated tenders. That's the tenders that does not get completed, and then you have to get other people to come and complete them. Those things, once again, is not just in the hands of the budget or Mr. Godongwana. That's in the hands of a government that needs to look at structural reforms in some of our policies, like BEE, like expropriation of land, like the NHI. That's what we have to go and look at, structural reforms in a lot of other areas that would also strengthen the hands of the Minister of Finance.
Can we also just mention that I personally found Godongwana's speech yesterday very uninspiring. I did not appreciate jokes about soccer while you're telling me Rome is burning. It just felt out of touch, and he did not read the room right. Just to add to, we need these speeches and these budgets being put forward to inspire confidence. His speech was just flat and for me completely devoid. And what we are talking about is it's easy for us to sit on this side and say we need a mind shift, but the ANC's ideology has always been very firm behind an economy driven by the state. That is their political socialist view on that. And I think, for them to change is going to be very difficult. They're going to have to be pressed in a corner to let some of those ideologies go. And that's one of my biggest concerns with this budget, because despite having this coalition government with all these political parties with diverging views, I'm seeing 99% the ANC fingerprints all over this budget. And that to me is concerning. So I'm looking forward to see how the ANC and the committees and all of them are going to panel beat this budget to make it more inclusive of different views, and not just the views that we've been seeing since 1994. And over the last 12 years, I think Zuma came into power to, 2009 to 10. It's just been destructive all over. Just make sure you can still mention your questions in the chat section. By the way, if there's any questions related to the whole Trump circus going on and the geopolitical tensions and trade, perhaps with China and the rest, please pop them into the comment section. I see there's a question on AGOA as well. We have one as well asking about the issues of unemployment and undocumented foreigners and how we can possibly address that situation. I don't know if any one of you is keen to jump on that. I've also got an inflation question to follow after that.
I mean, if I can jump into that, there's, Trump might not be everybody's cup of tea, and he ruffles feathers, and sometimes he can be a little bit of a bull in a china shop in the way that he approaches stuff. But if you have a look at some of the changes that he's proposing to make, he's doing it with a very clear objective in mind, and that clear objective is to try and protect his economy as much as possible. He's got his methods and his ideologies, but let's and we're not going to get into the debate about tariffs, etc. But on issues of immigration, he's been very strong on that, and he's indicated several times that immigration in and of itself is not a bad thing. Illegal, undocumented immigration is a very bad thing. And South Africa has got extremely porous borders. We've had this problem now for a good couple of decades. And it's unfortunate that it's gotten to the point that we've gotten to, because the burden on the tax base has grown incrementally year after year after year because of our porous borders. So, I agree with, Zondi is obviously expressing concern about it, and I would share that concern. I am also extremely concerned about that. I suspect, interestingly enough, that's part of what SARS wants to clamp down on, by the way, is illegal border activity and how to capture some of that, because there's customs, there's excise, there's undocumented people, etc., that are coming into South Africa. So, how do we tackle that? Well, that would be a great question to pose to the ministers, and to say, what exactly are you doing? Because it's got to stop if we're going to get to grips with SARSA payments, burden on state, burden on hospitals, burden on schools. All of that ramps up. if you can't keep control of your borders, it just ramps up and makes matters worse. In terms of the question with regards to AGOA and what impact will the lapse of AGOA have, I think just a little bit of perspective on this. The US is probably the fourth smallest trading partner to South Africa. It accounts for about 9% of South Africa's total exports. Of that 9%, if you whittle it down to the goods that are actually affected by AGOA, you're talking about 3% of total exports that are affected by AGOA. So obviously for those companies that are directly affected by it, it's going to have some sort of an impact for sure. But when I had a look at what would the tariffs change to if they were to normalize from AGOA to normal, what are you talking about? To give you an idea of the quantum of the shift, you'd be talking about 0 or 1% preferential tariffs under AGOA jumping to about 5-6%. I think the highest that I saw was a tariff of approaching 10%. So it's not that trade is automatically going to stop. In fact, I would argue that sometimes the swings in the currency can have a bigger impact on the price of that good than just increasing these tariffs by a few percent would have. So I don't view this whole issue with AGOA being the catastrophic event that many news vendors have made it out to be. That being said, the optics of it look poor. But again, South Africa is trying to enter negotiations with America, and if they strike a deal, it's going to be on a direct bilateral basis rather than being lumped in together with an AGOA group. So that's my general take on AGOA and the issue of the borders.
I think arguably to me more concerning about when it comes to these happenings from Trump is the aid fund cuts through PEPFAR coming to South Africa and possibly even aid losses coming through from Europe. We're seeing a massive shift obviously happening in Europe from their social welfare programs having to move to more defense spending as they gear up for the geopolitical tensions that's playing out. For me, that's more concerning, the aid funds, because Europe is a massive funder. We see the US trimming back as well. To me, that's arguably almost more concerning as opposed to just the trade negotiations that we could see lapse. George, just a question on the VAT increase. How concerned are we that, I know it's not a massive bump in VAT, it's 0.5 over 2 years, 1% over 2 years. The impact of that on inflation and the possible impact that could have on interest rate outlook, but also how could this then influence possibly discussions on lowering the inflation target that we know is ongoing and we know the Reserve Bank is pushing for?
Yeah, so I think that was interestingly, I think that might have featured in the overall discussion is the impact that this VAT adjustment would have on inflation, and that it was undermining the Reserve Bank's own efforts. So, if you took a 2% VAT increase on top of a base of 15%, in other words, you took it from 15 to 17, you'd be talking about an inflationary impact there of about 13%. So in other words, proportionately speaking, that's the inflationary impact. 0.5% of a base of 15 puts it down closer to around 3%. It's not that big a deal because it's more or less in line with where our inflation is at the moment. So net, it's not as inflationary as it could have been, but it does add. You're going to have the price of the good that goes up, and you're now going to add to that another 3% on top of the price of that good because VAT rose. So is it going to have an inflationary impact? Yes, it will, but at 0.5%, it's kind of manageable. You'll find that there's enough movement in lifestyle adjustments, for example. People will buy cheaper products, etc., such that the ultimate impact will be diluted and won't be as significant as it might have been under a sort of a 2% VAT increase.
Makes sense. Vigat, any further questions from your side?
No, lastly, I'm just going to end off with the comment that was made here about privatization by one of our clients, where he says, remember Telkom was Helcom, it was a failed SOE and it guzzled taxpayers' funds and then it was privatized. No, it's actually not performing too badly, and the government still owns part of it. So there's that at least. Yeah. So from that perspective, I think thanks for everybody for attending. We can see money is just not thrown into a bottomless pit, and government can really perform if we put the hands together. So, Andre, any last comments from your side? Wait, there's one more question here. Sorry, one last question. Does national budget take into account municipal debt that's out of control, that's owned to bulk suppliers and lot owned to Eskom? If not, how does that change the overall picture?
If you look at what the minister said yesterday, allocations to municipalities will now be based on performance. And the minister responsible for municipalities is trying his utmost best. But this just goes back to what we've spoken about, how you spend money. That's where the things go wrong in municipalities as well. There's so much leakage. They collect money, but the leakage is so much that they cannot afford their debt or repay their debt or cover their operational expenditure. So this comes back to what we said. It needs to be effectively addressed. The only thing that the minister can do is say, I will look at it, and I will look at the money that I transfer to them, and I will link them to a performance. George, what do you think?
Yeah, so what they're referring to there is when they are required to assist these municipalities. Municipalities are supposed to be self-funded, and they fund themselves out of the sale of electricity in some cases, and the rates and taxes that they collect, along with other revenue streams that they also generate. So what they're talking about there is when municipalities need additional funding, whether it be to restructure themselves or whatever it may be. If those municipalities are showing signs of turning around and moving in the right direction, National Treasury will help them out. If those municipalities are being run particularly poorly and show no signs of improvement whatsoever, National Treasury will probably take them over, bring them in-house, see what they can do to try and sort the problem out, because quite clearly there's a lack of oversight, and that whatever municipality they're looking at, if it's delinquent, clearly there's a problem there with processes and whatnot. Yeah, so there is a performance element to it, but municipalities are supposed to be self-funded. This budget is more about focusing on the government overall, and how it allocates the funds across the different ministries, etc. I just see there's another question over here. Could there be no collaborations between SARS, and Ministry of Finance? There actually is, believe it or not. I know for a fact that the Reserve Bank and the Minister of Finance, the Governor and the Minister of Finance are on, they're phone calls away.
They were sitting right next to each other yesterday in the gallery.
And in the same WhatsApp group.
They're in the same WhatsApp group. So no, they communicate quite a lot, and Edward Kieswetter is right there in the mix. So the three of them do communicate, they do collaborate. But again, just to reiterate the point, the issue that I have right now is more of an ideological one, and that's where we get stuck. It's the same story every year. Ideologically, the ANC is not ready to shift the dial in the way that it approaches policy. And until such time as they either weaken to the point where they're no longer the key drivers of policy direction, until such time, I'm afraid it looks like we are stuck with this kind of socialist, bigger government, more interventionist type mindset, and it's going to take some time for that to wind out of the system. But look, we've come a long way from the early days of having 2/3 majorities to suddenly being down close to 40%. That's a big shift. And I don't think that this budget does the ANC any favors, to be quite honest with you. So after this, they might even be comfortably in the 30s. Let's see where the local elections go. That's coming up pretty soon, and after that, it's back to national elections. They come up pretty damn quickly, and in economic terms, 5 years is nothing. We're already through, pretty much one. So, there's not that much time to go. There is still an opportunity for South Africa to rectify the situation.
In my opinion, if we just wait for the local elections next year, then we might see a stronger performance from the GNU, because I think the local elections is going to be quite a shock to the ANC, and the percentage that they're going to get as a total percentage of total vote is going to be less than the 40% that they got nationally. And so that will be a bit of a wake-up call further for them. And I think that might make the GNU stronger going forward after that, because they would realize we really desperately need to do something if we want to even be the managing partner of a GNU after national elections at the next round.
No. Yeah, it's interesting times ahead. We're a year away from the local elections, and let's not forget the year thereafter, the ANC has elective conference. So definitely a lot of political risk ahead. There's going to be a lot of noise still around this, right? The circus still has to fight this out, and how the budget that's going to be finally adopted, how it's going to be structured, who's going to get what's going to be the jockeying behind the scenes. We don't know. Some of the bigger parties, they have been staunch in saying that they're going to keep their red lines. They're not supporting a VAT increase, but things can change in politics. So we have no idea come May what the budget is going to be looking like when it gets adopted. So hold on to your hats, let the dust settle, and we will hopefully see a GNU that's going to come out stronger and really flex their muscle and pull South Africa in a trajectory forward for some economic growth to happen. Gentlemen, thank you very much for joining me. All the clients, please reach out if you have any further questions to both ETM Analytics and TreasuryONE. We will be happy to assist. Thank you so much for joining us.
Thanks, everybody. Cheers.
Thank you, everyone.
Thank you. Cheers.